Hey guys, Ryan G. Wright with DoHardMoney.com coming to you with a Just Ask Ryan question of the day. And today's question is rental property reserves. How much should I hold? What should I do? And I've got a great question. I've got a great answer to this. I've been renting properties now for 20 years. I bought my very first property when I was 21 years old, and I bought a duplex that I converted into a threeplex. And I'm going to tell you all about that. But before I do, if you've got a question you'd like to have me answer, all you've got to do is type it in the comments below, and I will answer it. I'll create a video just like this answering your specific question. So, on this question, rental property reserves, there's three things you need to think about when it comes to rental properties. One is vacancy, meaning no one's in the property. Now, there's some ways to make your vacancy go down dramatically. Like for me, my current tenant shows the property to my new tenants, so I don't have to have downtime. And if you set it up in advance, that works out really, really well. But there is some vacancy even with that. Number two is capital improvements. Now, there's a big difference between repairs and capital improvements. A capital improvement is something I'm putting that will last a very, very, very long time. Like I put on a new roof, or I put on a new AC unit, or do something like that. And then lastly, what we've got is repairs. Like I've got to do some carpet and paint. Those are going to be some of my more repairs. Things I've got to do to get rent ready that I've got to do now. Whereas the capital improvements is something I'm going to put on that's a big expense that will last a long time. So those are a couple of things that we're looking at. For me, what I plan on 5% vacancy, 5% capital improvements, and 5% repairs. So I plan 15% per month needs to go to those things. So for example, if the rent is $1,000 a month, I plan on $50 going to capital improvements, $50 going to repairs, and $50 going towards vacancy. For me, in my area, that's worked out really well. You may want to play with those numbers. Originally when I started, I had them a little bit higher, but as I became a better manager and I've had better systems in place, I've seen that go down drastically, so I'm actually spending a lot less. For example, my average tenant stays in my property over 4 years. So when you talk about rent turnover, that's pretty nominal. And then my tenants actually take care of some of the repairs themselves, meaning I only rent to people that have toolboxes and have lawnmowers. If you don't have a toolbox and a lawnmower, I don't want to rent to you. I want to rent to people that can do the little things. I don't want people to feel like that they're at the Marriott and all they got to do is call room service or call the hotel operator to come get something fixed. I rent to people that want to do those things themselves, who have a toolbox, and if the toilet's running, they know how to just take it off and see that the flap is the problem and put the flap back down. That will save you so much headache by renting to people that already have toolboxes, and that's actually on my rental application, so I know that they actually have it. So those are the three things you really need to look at: is vacancy, capital improvements, meaning major things, and repairs along the way when things break. Or let's say the furnace breaks and it needs a $200 part, that's going to be a repair. But if the furnace breaks and needs to be replaced, that's going to be a capital improvement. And one of the things that you can do is you can just take that money and put it right into a high yield savings account. So every single month I do a transfer over to a high yield savings account. I've used Citizens and I've used Synchrony Bank, and it just goes over there. That money just accrues, and then when I need the money because there's a vacancy, it's there. It does take a little while to build it up, but once it's built up, you have some cash there for those types of things. And then, especially if you're living off some of that cash flow, once you've built it up, you're not getting dinged. It's not going to hurt your standard of living. Now, the really hard thing is right now how much cash flow you should be getting from a property, because by the time you take 15% off the top and then you pay your taxes, insurance, and mortgage, the question just is, should you be cash flowing? And I would say yes. I think you've always got a cash flow. If you're not cash flowing, you've got a problem. The question is just going to be how much. Luckily, it seems like rents go up over time. Over the next 30 years, rents will go up. They may go down a few times between now and then, but the overall trajectory will be up, and property values overall go up. I do think properties will go down over time, but they'll come back up if you look over the long-term perspective. So, hope this is helpful. Rental property reserves, yes, you should have one. You need to figure out how much it is, and the reserves are broken into those three categories that we talked about. Setting that money aside is going to make you when it comes to the rental property game, it's all about sustainability. Markets go up, markets go down, rents go up, rents go down. The question is, can you sustain through market fluctuations over the long term? You want to be owning properties for 20, 30, 40, 50 years, even intergenerational properties, because you really get ahead once those properties are paid off. That can happen one of two ways: you using earned income to pay those properties down, or you paying the property off over time, over 30 years, letting your tenant pay the property off is what I should be saying. Or you get multiple properties and you sell one to pay off the other, so you start paying those down, so you have those properties paid down. It depends on the interest rates you have on them, and it depends on what you're trying to accomplish. But if cash flow is king, you want to be working towards something like that. So I hope this has been really helpful with rental property reserves. Like I said, I bought my first duplex when I was 21 years old. I turned it into a threeplex. I actually sold that about 5 years later. The market just went up and the property wasn't ideal. I think I made so many mistakes on that first one, but luckily I made money. It worked for me. I lived in one of them. I rented out the other two. It was a great experience. I'm glad I don't currently own the property because it had some parking concerns and a few other things. But values have gone up, and I ended up selling it, making a profit as well. So a couple of things. I've got a video you should check out on how to rehab houses for rental, and secondly, I'll put that in the comments. And then I've got a blog post on, do I need cash reserves to apply for a loan? It's a question a lot of people want to know. So check out that blog post and also check out that video. Again, if you've got a question you'd like to have me answer, please type it in the comments below and I'll answer that question for you. I'll create a video just like this one. And if you are looking for some help in real estate investing, whether that be in rental properties or BRRRR deals or fix and flips or wholesales, or whatever the case is, check us out over at DoHardMoney.com. We have money that we help out real estate investors with in doing their investments, but in addition to that, we have software, we have tools, we have finding, we have valuing. We can help you get up and running. Check us out over at DoHardMoney.com. I know you'll like it. If you've enjoyed this video, please hit the thumbs up key. That thumbs up button, I guess it's a button, not a key. Hit that. It tells Google, it tells YouTube that you like this content, and it means a lot to me saying you enjoyed it and I should make more of it. So it'd mean a lot to me if you hit that thumbs up button. Otherwise, make it a very profitable day, and bye for now.